Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, August 25th, 2025. So, economic activity last week that was reported. We mentioned in our preview a week ago, it was a very light week. Indeed it was. We have 4 data points that we're following, but none of the 4 really moved the markets. Another data point did. We'll talk about that. But in terms of the economic calendar released last week, building permits last week on Tuesday came in a little worse than expected. Certainly didn't move the market. But on the same day, housing starts. This actually was a big number, a big beat. Doesn't really move the market at this point, but maybe down the road it does. Housing starts, obviously, the affordability of housing, a big issue, both socially and economically in the U.S. Need more housing stock, it appears. Housing starts way better than expected. The expectation was a little under 1.3 million for the month of July. It came in at 1.43 million. Again, didn't move the market, but good news nonetheless. Thursday last week, initial jobless claims. Now, this came in worse than expected. Most of the surprises recently have been better than expected, upside. But the expectation was 225,000 jobless claims. From the prior week, it came in at 235, so overshot by 10,000. Not a big deal by itself, but we'll be watching that. Lastly, existing home sales for the month of July came in at a little over 4 million. The expectation was 3.92 million, so that also was favorable. So in total, economic data last week, mixed, maybe slightly positive. But the real story last week was the discussion at Jackson Hole, Wyoming by Fed Chairman Jerome Powell. That was on Friday last week. And I listened, watched the discussion. I didn't think there was anything necessarily different than what had already been communicated. However, the markets were very excited about it. Took it as a dovish statement by Jerome Powell that the Federal Reserve would adjust their policy if they saw weakening economic data. But they say that virtually every time, that they're data dependent. And at the end of the day, that's what they said, but the markets loved it. So we had a nice market rally on Friday. We'll go through the numbers in a moment. First, before we hit that, we'll just mention economic activity here in the third quarter as measured or gauged by the Atlanta Federal Reserve. We mentioned the fact that they expect a very strong third quarter GDP number. A week before, the expectation was 2.5% GDP growth. They took that down a little bit last week to 2.3. Nonetheless, that would be a very solid number if that does happen. In terms of inflation expectations, a little bit of uptick last week. 2.41 is now the expectation of the average over the next 10 years. But again, the big takeaway from last week was the dovish statements from Fed Chairman Powell in terms of interest rate expectations. So Fed meeting on the 17th of September. There's now an 86% chance that there'll be at least one cut. That's slightly above where it was a week before. It was 83% just 1 week ago. So little uptick, not dramatic. Also, the expectation of at least 2 rate cuts, that went up slightly as well. It was 81% a week ago. Finished Friday at 83%, and then the probability of 3 rate cuts, that didn't move. It's still 33%, same as it was a week ago. But nonetheless, market participants most definitely very excited by the Fed commentary. As a result, equities performed very well on Friday. And for the week, we'll go through those numbers, and it was very good for fixed income here in the U.S. So, on the heels of the Fed chairman comments on Friday, again, the market rebounded on Friday, big up day, but the market participant on the equity side that didn't participate, a little bit surprising, those large cap Magnificent Seven names that have driven the market returns for the last over 2.5 years. So for the full week, last week, S&P 500 barely up, 0.3%, But if you take the S&P 500 equal weighted, that was up nearly 2% for the week. Even better than that was the fact that small cap, big rotation last week to cyclicals in general, but to small cap, to value stocks. So small cap stocks last week up a very strong 3.3%. Again, S&P 500 nearly flat at 0.3%. So value last week also strong, growth flat, positive 0.2% last week. Value though up 2.31%. International markets, developed ex-US, strong week, up 0.9%. Emerging markets, however, they were down about 0.5%, and actually they were buoyed, strengthened by the fact that China was up 1.6% last week. So the emerging market index ex-China, pretty poor week despite the fact U.S. was strong, equity and developed market ex-U.S. strong. Fixed income. Last week, the 2-year and the 10-year both fell in yield. The 2-year down 5 basis points, the 10-year down 6 basis points. That led the Bloomberg U.S. Aggregate Bond Index up last week. It was up 43 basis points, and on a year-to-date basis, it's up 4.8%. So if we take a look at the economic activity that will be reported this week, again, we have some modest information that comes out during the week, but Friday's the big day. That's the inflation day. We'll go through that and some other metrics. But starting the week, here on Monday, building permits, new home sales. Haven't looked at the numbers, but again, these won't be market moving. But the expectation is those indexes will be up in July from what they were reported in June. On Tuesday, this could move the markets a little bit. Durable goods orders, that's expected to improve month over month. In June, it was down significantly. It was down 9.3%. The expectation for July is it is expected to have been down 4%. For Thursday, initial jobless claims after last week coming in at 235,000, expected to be a little bit better at 230,000. And then on Friday, we do get a lot of economic data. And the headliner, of course, is the inflation data. It's the PCE series, the personal consumption expenditures. It's what the Fed uses most prominently in their target policy setting. So the big number is the month over month for July, the PCE price index. The expectation is that's going to drop. The month of June, that was up 0.3%. The expectation for the month of July is that came in positive 0.2%. Now, core PCE for the month of July is expected to be exactly the same as June, and that's a positive 0.3%. Some other positive expectations. Personal income for July is expected to have accelerated. It was up 0.3% in June, expected to be up 0.4% in July. Same thing for personal spending. Personal spending came in at 0.3% in June and is expected to be up a full 0.5% in July. Lastly, one last data point for the week. It'll be Michigan's Consumer Sentiment Index, easy for me to say. That was already released. This is the final version. It already came in much more negative than expected. So the final version is expected to come in at 58.6. So that's it for our wrap-up this week. We thank you very much for your attendance. We'll look forward to seeing you next week. Thank you.